Hi guys, Lee Gettess here with the Market Sense for the week of October 31st, 2017. That's Halloween for those of you keeping score at home. We will look at some charts that are provided to us by Gettess and their Trade Navigator software, which I really like. We're going to look at the bond market first, and there's more to do here than stocks, as you'll see. Bonds are kind of interesting. They have stalled or have gone up to right what could possibly be the toughest resistance for the week. This is the 152.17 to 21 area right in here. And if that caps them off, they have a tendency to continue this move down that started back up here at the high and, could be looking rather ugly. However, we do have a slight divergence in the momentum indicator with the low of last week and a pretty good recovery last week off of that low. If they pop through here, they could easily go to the 153.20 area. And of course, if they take out these old highs here around 154, well, that would look very positive. So really interesting to see what they do in this area right here. That's good resistance, and it's not broken until it's broken, so that could hold and knock them down. Just a little clue that maybe it's not that strong. So, we'll just have to see. And listen, this is the week of the Fed meeting, the week of 3 different employment reports. Pretty tough to know what might impact them. Stocks are boring by comparison because they just keep making new all-time highs, and there's really nothing to do. If you get a chance to buy support like you could have done when it got to the green line here, great. If not, there's nothing to do. You don't want to sell resistance up here. We've got a target up here over 25.90. I think it's 25.91 and change. That's all it is a target. Don't want to sell them up there except maybe to cover a position if you bought them. The best place to buy them would be roughly the 25.60 area if they get to this green line here. Of course, they did bounce off of that last week, so we can't rule out them dropping a little lower and going below in 25.50. That's actually pretty close to 25.40 down here at the lower moving average. The problem, as has been for some time now, is they could drop all the way back down to the mid-Keltner here below 2,500, they'd still look good. I mean, that wouldn't be a bearish move if they did that. They would still look very healthy. So, boy, if you buy them, I think you almost have to have a time stop rather than a risk parameter. The risk is just huge if you look at the price swings. I think you got to buy them, and if they don't go up, get out right away. I mean, if you get a chance to buy support. And the earliest support I could see is 25.60, which they have not been to, so maybe there's nothing you can do. But that's how we're looking at things today. I hope you can find something profitable to get yourself into.